Topic examines the environment in which alternative investments operate, focusing on market participants, investment structures, regulatory systems, and financial market mechanisms. The topic explains how alternative investments differ from traditional investments in terms of liquidity, transparency, governance, and operational complexity. Market participants include institutional investors, fund managers, intermediaries, regulators, and service providers who collectively shape the alternative investment industry. The program also explores legal structures, fund organization, fee arrangements, and financial market regulations that influence investment operations and investor protection. Understanding the environment of alternative investments is essential because these investments operate within highly specialized and evolving financial systems worldwide. A major focus of topic is the role of institutional investors within alternative investment markets. Pension funds, endowments, sovereign wealth funds, insurance companies, foundations, and family offices are among the largest participants in the alternative investment industry. These institutions typically possess long investment horizons, substantial capital resources, and sophisticated risk management capabilities, making them well suited for illiquid and complex investment strategies. Investment managers and general partners design specialized products to meet institutional objectives such as diversification, inflation protection, income generation, or enhanced returns. Service providers, including custodians, administrators, auditors, legal advisors, and consultants, support operational efficiency and regulatory compliance throughout the investment process. Together, these participants create a highly interconnected alternative investment ecosystem. The program also explains the organizational structures commonly used in alternative investments. Hedge funds, private equity funds, and private debt vehicles are often established as limited partnerships or limited liability companies. In these structures, general partners manage investments and operations, while limited partners provide capital and maintain limited liability exposure. Fund structures may include offshore entities, master feeder arrangements, or special-purpose vehicles designed to improve tax efficiency, regulatory flexibility, or investor access. The program highlights the importance of understanding fund terms such as lock-up periods, redemption restrictions, hurdle rates, carried interest, and management fees. These structural characteristics influence liquidity, investor rights, governance, and the alignment of incentives between managers and investors. Topic further examines financial markets and trading environments relevant to alternative investments. The program discusses primary and secondary markets, securitization, over-the-counter trading, and short selling practices that support investment strategies and market liquidity. Short selling enables investors to profit from declining asset prices but also introduces leverage, borrowing costs, and potential regulatory concerns. Alternative investments often rely on less liquid and less transparent markets compared to traditional securities markets, creating opportunities for specialized managers to exploit inefficiencies. However, reduced transparency and complexity may also increase operational, counterparty, and valuation risks. Understanding market structures and trading mechanisms is therefore critical for evaluating the behavior and risk profile of alternative investment strategies. Regulation represents another important component of the alternative investment environment. The program explains that regulatory frameworks vary significantly across jurisdictions and investment structures. Regulations may govern disclosure requirements, investor eligibility, leverage limits, reporting obligations, custody arrangements, and marketing practices. Compared to traditional mutual funds, many alternative investment vehicles operate with greater flexibility but also face fewer disclosure requirements and less regulatory oversight. Institutional investors often conduct extensive due diligence to compensate for reduced transparency and regulatory protections. The program emphasizes that regulatory developments continue to evolve in response to financial crises, systemic risk concerns, and growing institutional participation in alternative markets. Effective regulation seeks to balance investor protection, market stability, innovation, and capital formation. Finally, topic highlights the broader economic and operational factors influencing alternative investments. Market conditions, interest rates, credit availability, investor sentiment, and technological innovation all affect alternative investment performance and capital flows. Operational infrastructure, governance practices, and risk management systems are particularly important because many alternative investments involve leverage, illiquidity, and complex strategies. Successful participation in alternative markets requires thorough due diligence, specialized expertise, and a strong understanding of legal, financial, and operational risks. As the alternative investment industry continues to expand globally, professionals must remain informed about evolving market structures, regulatory changes, and institutional practices. Understanding the environment of alternative investments helps investors make informed decisions and manage risks effectively within increasingly sophisticated financial markets.